All right, let's get right into it. Today we're going through the official trading guide for the Cryptomanden Protocol. Now, this isn't going to be a bunch of theory. Think of this as a step-by-step execution manual, something designed to give you a real statistical edge in these crazy crypto markets. Let's dive in.
You know, at the heart of pretty much every single trading mistake is one simple truth. We, as humans, are just wired to make the wrong call when we're under pressure. Fear kicks in and we sell right at the bottom. Then greed, or let's be honest, FOMO, takes over and makes us buy the absolute top. This entire protocol is built from the ground up to solve that one fundamental problem.
And this really shows the core conflict, doesn't it? On one side, you've got the emotional human trader, just driven by impulse, fear, and hype. And on the other side, you have the Cryptomanden AI, which runs on nothing but pure data, probability, and cold hard logic. The goal here is simple. We're going to learn how to replace your emotional reactions with its statistical execution. So here's our roadmap for this session. First, we'll cover the AI versus your emotions. Then we'll get into the pre-trade ritual. After that, the main event, executing a live trade. And we'll wrap up with the long-term winning mindset.
Okay, Section 1, the AI versus your emotions. Let's start by really understanding the powerful tool that you actually have at your disposal here. So, what is the Cryptomanden AI really? Well, it's not just some single bot. It's a proprietary neural network, and it fuses over 7 of the leading AI models out there. We're talking Gemini, OpenAI, Grok, Claude, all into one. So think about it this way. While you might be panicking during a massive market dump, this network is just calmly calculating probability, looking for the logical entry, not the emotional one.
On to Section 2, the pre-trade ritual. Look, winning trades don't just start when a signal pops up. They start with preparation. This is your 5-minute daily edge. And I want to be clear, this is not busy work. This is your competitive advantage. First up, you read the performance report. It tells you which timeframes are actually working right now. Second, you use the /news command to check the macro sentiment. Are you about to trade with the market's flow or fight against it? And third, you audit your exposure to make sure you're not over-risking your account before you even place a single trade.
Now, this is a big one. This is where you have to be really honest with yourself. Choosing the right time frame isn't about your ambition, it's about your lifestyle. If you've got a full-time job, that 1-hour tier is your fortress. You can check your phone a couple of times a day and you're good. But if you try to be a hero and pick the 5-minute tier, you better be glued to that screen.
And let's be crystal clear on this, because this is probably the #1 reason people fail. The 5-minute fast here, those trades can last just 15 to 45 minutes. If you get a signal, then you hop into a meeting and you come out an hour later, you've missed the exit. I guarantee it. You will literally turn winning trades into losers. You have to choose the time frame that matches your reality.
Okay, Section 3. This is the core of the whole thing. Executing a live trade. We're going to go from the moment the signal hits all the way to the exit, piece by piece.
Okay, so a signal hits your device. Bitcoin long. The first thing you see is the entry price. Let's say it's $67,340. Now that is the price at the exact moment the AI triggered the signal. If the price has already shot up to $67,800 by the time you see it, the rule is brutally simple. You do not chase it. You either wait for it to come back down or you just miss the trade, period. Next up, you've got your take profit levels. We'll call TP1 68,200 and TP2 6800. These are your predefined targets. They're designed so you can scale out of your position, locking in those profits as the trade moves your way. And now for what is easily the most important part, your stop loss. The signal gives you 2 of them. SL1 at, let's say, $66,900, think of that as a warning shot. But SL2 down at $66,400, that is the kill switch. That is the eject button. If the price hits that, the trade is invalidated, it's over. And understanding this difference is absolutely critical.
So let's play this out. You're in the trade, price drops, and boom, it hits SL1. You're now down 1.5%. Your heart starts pounding. That emotional voice in your head is screaming, get out, cut the loss now. So what do? Do you panic or do you stick with the protocol?
Here's the framework. Because crypto is so insanely volatile, SL1 is just a warning, not a mandatory exit. A quick spike can easily hit it and then just reverse right back into profit. So for new traders, the action is simple. You monitor it very closely. If you're more experienced, you can start to assess the momentum, see a strong bounce with some volume, you might hold. But SL2 is always non-negotiable.
Let's actually walk through the risk management math, not some fuzzy theory. Say you have a $10,000 account. You're going to risk a max of 8% of that capital on any single trade. So that's $800. Now, with 5x leverage, that $800 controls a $4,000 position. If your stop loss on that position is set at 2%, well, your maximum possible loss is just $80. What does that mean? It means 4 losses in a row won't kill your account. This is how you survive in this game.
And that brings us to what we call the Bitcoin gravity rule. Just imagine you're in a Solana long, you're up 3%, feeling like a genius. Then, out of nowhere, Bitcoin dumps 5%. What happens? Altcoins and meme coins always drop harder. Your Solana signal is now invalid, and it doesn't matter what its own chart looks like. When Bitcoin bleeds, you get out of your alts. No questions asked.
All right, our final section, the winning mindset. This isn't just about one trade. This is about how you survive and actually thrive long-term.
Here is a classic psychological trap. Let's say you turn $10,000 into $15,000. You feel invincible, right? So what do? You immediately open up some crazy 20x leverage position to accelerate. Well, that's the fastest way back to zero. The solution is the two-wallet system. Your trading wallet is for active risk capital. Your profit wallet is a protected vault. You have to regularly move your profits out, and you never, ever move them back in to cover a loss.
And what about those extreme black swan events? I mean, think about an exchange collapse like FTX. When something like that happens, the AI will announce trading suspended. This isn't the AI just being cautious, it's physically preventing you from gambling. Because in a black swan event, all technical analysis is completely useless. The AI is protecting you from a broken, irrational market until some kind of structure and sanity return. So let's be perfectly clear about what this is and, more importantly, what it is not. This is not financial advice, it is not a get-rich-quick scheme, and it is definitely not a casino. It's a tool. It's a tool that provides a statistical edge, and that edge only shows up if you execute with discipline over hundreds and hundreds of trades.
Which really just leaves us with this final thought. The protocol and the AI, that's the weapon. It's probably the sharpest edge you can get. But at the end of the day, it's your own psychology, your own discipline that will determine whether you use that weapon to win, or if you use it to shoot yourself in the foot. The system works, but only if you work the system.